Luke Lloyd is our market watcher this Tuesday morning. Luke, new year,
Hey, Stu.
hitting new highs despite the surge in COVID. Tell me, spell it out. In your opinion, what's the biggest threat to the market right now?
Yeah, so there's a big difference, Stu, between the most likely biggest risk and the absolute biggest risk, right? So the absolute biggest risk is if the United States goes heavy mandates and restrictions, especially if there are nationwide mandates. The politics behind COVID, not the actual virus, is what every investor is worried about. If we shut down again, the Federal Reserve would be put in a corner. Should they be hawkish or should they be dovish to combat inflation or not, right?
But wait a second,
the supply
Luke,
chain couldn't handle another shutdown. Just look at inflation.
But that's unlikely. Isn't it? Another mass shutdown, mass mandates of all kinds. That's unlikely if we're very close to peak COVID and we can see the other side. I can't see him putting in mass shutdowns if the number of cases is starting to decline rapidly.
Listen, Stu, when it comes to this administration, I think anything is possible. I mean, we're already seeing states like New York City and New York and California. They're putting mask mandates, vaccine passports. Even if we don't fully shut down, the mask mandates and the vaccine passports destroy economic growth. So, if more states start to follow, that's not good. But like I said, it's not the most likely biggest risk, but it is an absolute biggest risk, and it is possible.
I see some companies, especially those that run the big office buildings in Midtown Manhattan, some of them are retreating from testing, not encouraging testing because they don't want people to turn up positive and have to go into quarantine with all their co-workers. So that's another thing that's really starting to move things towards opening up. I see this positively, Luke.
And I do too, Stu. I'm absolutely there with you. I mean, like we saw yesterday, we saw over 3 times the amount of cases reported yesterday than the previous peak of the pandemic, and that's just the reported cases. I mean, we could be at 4, 5, 6, 7 times over the previous peak of the pandemic, but deaths are half of what they were, and hospitalizations are way down as well. So that tells me that's the direction we want COVID to go, and I think investors agree with that. But that being said, it's all political right now, Stu. Politics influence finances, and if we do shut down again, if it is a political agenda, that's not good.
Okay, absent COVID, absent seeing the other side, forget about that for a second. Are we going to keep hitting a series of new highs in the early part of this year?
I think we got to make sure we take a step back from the past couple of years. We had the easiest earnings comps in 2021 to hurdle over, and we blew past earnings estimates this past year. When that happens, earnings estimates go up for the next year. So now in 2022, we're back to pre-COVID earnings growth, which isn't very exciting, especially in this rising interest rate environment. So I think 2022 is going to be a letdown year. If you're expecting double-digit market returns, we've been spoiled the past couple of years with 15 to 30% gains. It's time to get back to reality now.
Yeah, we have been spoiled, and that's a fact. Luke, thanks for joining us.